Fatafat on ET now with me, Snehi Shah. And well, this is a show where we'll be taking you through all the big buzzes in today's trade, tell you why they are buzzing, and also bring on technical experts on board on the show and give you a technical check of some of the stocks that are on their radar as well. But before we kickstart the show, let's take a quick look at what the market right now, but managing to hold on to that 23,500 mark. Let's also take a look at what Sensex is doing, because some cuts were seen on the Sensex as well earlier in the day. Remember, the first couple of hours for the trading day were really positive for Nifty and Sensex. Both of them were firmly in the green, but right now seems to have been under some selling pressure for both of these. They're coming in on that index as well, and 50,000 plus is where the index has managed to hold on for now. If you take a look at what the broader markets are doing, the real show of strength coming in from the broader markets today, you have Nifty mid cap that's doing pretty well today. That's up almost 1%. Nifty small cap gaining in fact 1.5% higher is where Nifty is as well. However, what's doing well for the market right now is the entire realty space. So 1.5% uptick coming in on realty. Followed by that, you have auto, bank, Nifty metal, energy. All of these indices are in the green. However, what's lagging along with Nifty FMCGs, Nifty PSU banks, you have Nifty IT and Nifty that seem to be dealing under some pressure. We'll be taking you through all the big buzzers in today's trade on the show, and to do that, joining me on the show today is Rajesh Bhosale, technical analyst at Angel One on the technicals, and on the fundamental front we have Ria joining us from our research team. Good afternoon to both of you, and thanks so much for joining us on the street today. Give us a sense of what you are seeing on the charts and what's the momentum that you expect for the stock to head in, and the key levels to watch out for.
So good afternoon, Snehi. So if you see the chart of Eicher motor, so since yesterday the stock is showing strong pattern known as bullish kicking. So this is a very rare pattern that we generally see where prices start with a strong gap up, engulfing all the losses of entire day in just the opening tick. So this is a very rare pattern forming on a very strong support 15,100, and then maybe towards the uncharted territory towards 5350, 5400. So maintain a positive bias with a stop loss of 4700.
Okay, so that's the levels to watch out for when it comes to Eicher Motors. Let's also quickly make sense of what the brokerages are saying for this stock. Ending with a target price of 5,400, they believe that the quarter 2 is in line with their expectation, but the product cycle and demand visibility also represent good risk reward. You also have a note coming in from Citi on Eicher this morning. They've maintained a buy rating. However, on the flip side, they've cut the target price to 5,350 rupees from 5,500 rupees, more than 6.5% in trade right now. But let's shift focus and talk about another stock that's in focus today, and that's Mishra Dhatu Nigam, popularly also known as Midhani. That stock is up almost 5.5% as we speak. It's on the back of a good set of quarter 2 numbers. Let me run you through what the earnings fine print looks like. Revenue has come in at 2-year basis. EBITDA, if you take a look at that, that's also expanded, come in at 49 crores compared to 36 crores, which is up roughly 35% on a year-on-year basis. And largely, margins have also seen some expansion coming in on that front. 18.7% is where the quarter 2 margins are at, compared to 16%, which is up more than 5.5%, almost higher, is where Midhani is right now. But Rajesh, coming back to you for a technical check, you've picked out Suven Pharma on the charts for us. Now, while the pharma sector has been in focus with everything that's been happening in the US in terms of elections as well and back home, give us a sense of what you are seeing on for
About Suven Pharma, this stock has performed well as compared to other counters, and it has continuously moved in a higher top, higher bottom formation. If we see pharma index, it is also on a key support, and we would bet on the counters which are showing the near term possibly headed back towards its previous high of 1350. So the strong support that comes around is the 50 EMA, which has been acting as a support that is placed around 1200. So any dip can be considered as a buying opportunity, considering the pharma index is on a separate upside that could be expected.
1350, next upside to watch out for on Suven Pharma. That's the view coming in from Rajesh. Ria, coming to you now. You've picked out Kirloskar Oil Engines for us. It's an earnings candidate. Tell us what the numbers look like.
Yes, absolutely. So Kirloskar Oil Engines has come out with, if you look at the EBITDA, that has also gone up by around 45% on a year-on-year basis, and a very healthy expansion on the margin front as well of over 407 basis points, coming in at 19.5% in this quarter. Now, if you look at the power gen business sales on the domestic side, those were up around 34% on a year-on-year basis, in those to stabilize across the nodes on this front. On the international side, there has been strong growth for the industrial and firefighting products, and the power gen products products are facing a little bit of a slowdown in the international markets due to the changing power scenarios in key markets such as South Africa. But overall, healthy
Stock is holding up pretty smartly in today's trade, but earlier in the day we also caught up with the management of Kirloskar oil engines, and power generation demand will pick up after the move on from the transition period, says the MD of Kirloskar oil engines, Gauri Kirloskar. Let's go across and listen into what else she had to tell.
And we will continue to make progress there. So I hope to see a steady increase in margins. We have also done pretty well in our industrial engines business. And increased our share of wallet from, say, defense and railways and customer segments that were now focused. Strong demand from infrastructure, from real estate as segments. And we do expect in Q3 and Q4 that these segments and in general, the power gen demand will pick up as compared to Q1 and Q2 of this year.
Positive and bullish on this one. Is that your view as well when it comes to this stock? Because last 1 year the stock is up 80%. So tell us what's the outlook going ahead.
So if you see the charts of Indian hotels, so it is trading in an uncharted territory. So it is like very rare. I mean, even 20 levels, and a bullish gap is also left where any dip is now taking support at around those levels. So we have a strong positive bias. We expect this uptrend is likely to continue. In today's session, we are seeing fresh long formations in futures as well. So expect Indian hotels to at 780, 770 is what we potentially expect in the next few weeks.
Okay, 770, 780, next levels to watch out for on the upside for Indian hotels. So that's another bullish call coming in for this stock. But on that note, viewers, time for a short breather on this edition of Market Fatafat. We'll be right back with all the big buzz.
Welcome back. You're tuned into Market. What the scorecard looks like. First, on a year-on-year consolidated basis, the revenue saw a downtick of 21.5% on a year-on-year basis. The net profits were down 10.9%. The EBITDA was down 10%. The EBITDA margins, however, saw an expansion of 346 basis points on a year-on-year basis. But its volume of approximately 1.68 million square feet, with the average sales realization increasing by 45% on a year-on-year basis to 10,832 per square foot. The company's also the revenue from real estate stood at 727 crore rupees with EBITDA of 107 crore rupees. Announced plans for the new launches totaling 16 million square feet in the next 4 quarters, with approximately 19 million square feet slated for the residential sector. The company's total connection for Q2 stands at 1,930 crore rupees.
Okay, so that's why Brigade Enterprises in focus. Remember, they've also fired the managing director of the company, shares the demand outlook going forward, and she also sees strong demand in luxury segment in the medium to long term. Let's go across and listen.
In the long run, or at least in the medium term future, we see that there will be strong demand in the luxury segment as well as locations as well. So if pricing is stable now, I feel the demand will still continue to be stable. It will still be fairly affordable. Interest rates are still at 8.5%, 8.6% for home loans, which is all helpful for people to make their first home buying investment.
A counter that has reported its earnings recently, but on the charts, what are you penciling in? The cement counters haven't really done very well, owing to the weakness in the demand. But tell us, how does Ramco cement look on the charts for you?
So yes, definitely cement counters have not done well in recent times, but 25. So we are seeing a weekly breakout that is supported with a strong bullish gap, and we are seeing that now any dip towards 20-day EMA is being bought into. Yesterday it was there was some weakness, but again there is positive momentum in today's session. On the futures as well, we are seeing a weekly breakout, expecting the stock to move towards 960, 980 in the coming few weeks. So have a positive bias. The bullish gap left around 870, 880 will act as a support.
Okay, so bullish call coming in for Ramco Cement from Rajesh. Let's talk about yet another high, 113 crores, which is up roughly 10% year on year. Net profit is coming at 18 crores compared to just 2 crores this time last year, which is a massive 9 times jump coming in on that metric on a year on year basis. EBITDA has also come in at 86 crores compared to 60 crores, which is up 42.6% on a year on year basis. And the street is also reflecting the good set into the stock price today, and 6% higher is where the stock is as we speak.
All right, moving on. Coming to you, Ria, you've picked out Varun Beverages for us. It launched its QIP also. Tell us what's the news flow that is, powering the stock.
Yesterday, at a floor price of rupees 594.56 per share, which was a premium of 4.7% to yesterday's closing price. Even the indicative offer price has come in at rupees 565, which is a discount of 1.5% to yesterday's close price. Now, the base size for this issue is rupees 50 days for the investors, and the bankers for this issue have been Kotak Mahindra Capital, CLSA India, IIFL Capital, Jefferies India, and Motilal Oswal Investment as well. Now, another bit of news flow on Varun Beverages. It is also going to be included in the F&O list from the 29th of November. So that is why the stock isn't
coming in across the realty space. Tell us what is your outlook on the charts when it comes to Oberoi Realty, and would this be your preferred pick or your preferred way of playing the entire real estate space going ahead?
So yes, definitely. If we see the reality space in the last few weeks, we have seen weakness in would be the stop loss. On the high side, we expect this positive momentum to continue as the prices are moving up, volumes are also picking up. Possibly the stock is headed towards 2150, 2180 in a very near term.
All right, that is Oberoi Realty. Downtick of 37.3% on a year-on-year basis. The revenues were up 2.5%. But EBITDA was down 24.3% on a year-on-year basis, and the margin also saw a downtick of 483 basis points. Now, JP Morgan came out with a note on Apollo Tyres, and they're maintaining due to the seasonal working capital increase, but they are maintaining their overweight. UBS is maintaining a buy with the target price of 605 rupees on the back of bullish notes coming in by the brokerages. Despite a weak Q2, Apollo Tyres is a buzz. In fact, it's trading with gains of over 4% right now.
Okay, so brokerage notes actually keep it.